Hello and welcome to Capital Impact Strategies. I'm Craig Ivy.
And I'm Ashley Trulitza. So today we're talking about investment management, which is an integral service here at Capital Impact Strategies. Craig, I was wondering if you could tell us a little bit about how our approach to risk reflects our clients.
It's a good question. So a lot of our clients are, near or at retirement. So as you might expect, have kind of a more conservative approach to risk than maybe somebody who's kind of mid-career still adding to their investments on a daily basis. But it's important to have those conversations to see exactly what is their attitude towards risk. And you know from experience that if you're talking to a couple, it's likely that one of them
Polar opposite
yeah
ends sometimes.
have a different risk than the other. So it's kind of melding those two things together. And then so that's kind of their attitude towards risk, and then what's their capacity for risk, meaning you know if we're looking at this long term, is the amount of money that they've saved up and their other income sources, is it sustainable to either take on that much risk, or on the other side take on too little risk. So I mean, you're obviously more involved in kind of the cash flow scenarios, so you know risk capacity
Sure,
obviously.
yeah, certainly see that and even try out different portfolios to see how they might look.
Right. Well, I especially think back to, we operated at, near zero interest rate environment for more than a decade. And so you really probably then had to be much more wary of not taking on enough
Hmm.
risk because, cash at that point was getting, eaten away, eroded by, just
Yeah, general
inflation.
inflation and
So,
yeah, sure.
so but yeah, I mean, those two things, their attitude towards risk, how they feel about it, and then their capacity, how much, some families, can take, a lot of risk or very little risk. And then others, there's a kind of a smaller window.
Makes sense. So, I mean, you've been at this for over 15 years. In that time, what has your experience taught you about building portfolios and working with clients?
It's a big question. Um, so some things that come to mind, um, just how important flexibility and dexterity is, meaning that just because you've made a decision that you feel confident in that decision doesn't mean that new information won't come to light and cause you to question that, or make a change. We definitely don't want to stick with any strategy just because it's the strategy that we picked. So being flexible, I think, is important. You've heard the saying, cliches are cliches for a reason. And that applies to some of the longstanding investment rules when you think about, trees don't grow to the sky and bull markets don't last forever. So definitely don't want to get trapped in the energy of the moment and where
Mm.
things are going as far as momentum. So the other thing I think that probably has brought me some level of comfort over the last 15 years is trying to implement strategies where we are making our money on the buy side, meaning that we have found things that we think are more valuable than we're currently paying, and we hope that the market will soon reflect that. And that's counter to you if you were investing in something just hoping that it would continue to go up. So those are a couple of things that I think about as we look back on my years of experience, and then kind of some things that I've learned, possibly even the hard way by making mistakes.
Well, that all makes sense. Thanks, Craig. So take the first step towards a stronger financial future. Schedule a conversation with us today to discuss how our tailored investment strategies can benefit you.